Hi everyone, delonewolf here. Welcome back to EVE Talk, your weekly look at the market in EVE Online. And well, there was a pretty big announcement late last week because CCP announced that they were going to or planning to increase taxes when the Citadel expansion hits. The aim is to provide more opportunity for active trading in Citadels. So obviously there's a bit of a risk involved with that, and as a result CCP wants to reward them with possibly lower taxes set by the players, by the owners of Citadels. So I personally think that that's going to be a major impact on the economy in general, but I also don't think that it'll show up this week just yet, because people are still actively trading under the current rules, and of course people are looking to maximize their profits right now. So I don't think that people are already planning, well, probably planning, but already actively trading with the increased taxes in mind. So let's check it out. We'll jump right into the market here. We'll start as always with plex at 110. And plex are continuing to go down. They're now at 1169, 1170, something like that. But on the chart here, the 6-month chart, is clearly visible that the top of 1.26 billion was reached, and that the pressure is on. The 5-day moving average is staying well below the 20-day moving average. In fact, the gap has even been widening a little bit. So this is a pretty serious correction from the top. So from the average prices, we're just below that now, heading towards 1.16 billion on the chart. The previous bottom, 1.12 billion. We'll see how low we can go, but this is definitely, I think, something to keep an eye out for, because when this bottoms out, it could be a great buying opportunity. So I don't have that much extra ISK left, but I could probably try to buy a few of them at the very bottom prices. So I think that this is pretty interesting. One thing to keep in mind though is that EVE Prosper, for instance, who has been right about a lot of things, thinks that the skill trading could actually put more pressure on plex prices to decrease, and so this could be all part of that mechanic working as well. So if you think that this is just a correction that is going to stop and that then towards Citadel it's going to increase in price, which is what I think, then this is something that you might want to time to try and find the bottom and purchase a few plex to take advantage of that. If not, if you think that this could actually be a correction due to fundamentals, then obviously I would like you to let me know what you think plex is going to keep doing, where it might bottom out. If it's in for an even bigger correction than the let's see what it is, 12 billion that it's already lost, or 12 million that it's already lost. So we will see. It's pretty interesting to see this this decline and seemingly having legs here. It's not what I expected personally. Next up, the multiple pilot training certificate, similar chart but hesitating a little bit. Of course the move down was towards 1.16 billion much more quickly, bounced off of that, and now it's heading back in line with where plex was. So basically the training certificate declined a little bit too quickly, more quickly than the plex market, and I guess that the plex guys actually saw this as an opportunity, brought it back in line, and now we're back in on the decline here. So I think it's going to be pretty interesting seeing if we can actually time a bottom or find a bottom on plex and what it will do after that. The pilot body resculpt, yeah, doing the exact opposite. That's a little bit unexpected, actually taking off here. What could be a possible explanation for the body resculpt now going for, well, pretty much empty and going for 315. It could be market manipulation. It is a small enough market that someone could buy up everything and then relist it for a higher price. Another possibility is that with all the skill injecting that has been happening, people might just have found new mains and want to customize that one exactly to their liking, not that they'll be actively flying that one in, let's say, carrier or different combat ships, whatever the role is. So it is possible that there's just more demand for these as well. Next up, the skill extractors. We're obviously still not on a good chart. I think by the summer we'll have a much better idea and maybe some historical perspective here. But we took off from 310 million and we're seemingly going down towards 270. So it's 267, 268 for the sellers, 263 million for the buyers. Pretty small margin here, just around 4 to 5 million. That's not that much, and availability is still quite high. Look at that, still skill extractors. That's actually quite a few of them. Even in the last 24 hours we still have, well, probably close to 1,000 units that are being brought to the market. So if you want an extractor, I think it's quite okay to buy them at the moment, considering the high availability that we're seeing at the moment. Next up, the skill injectors. That's probably going to be more interesting. Well, look at that, started at 660 for the very first data point, declined to 615, then went back up to 650, and now we're once again declining towards 625. So already a pretty rough start for the skill injectors, which I think does indicate that there's pretty high demand for them. So let's take a look here. They're currently selling for 627 and the buyers are trying to buy them for 616.5. So around a 10 million margin, which is more than 10% of the asking price. So that's actually a pretty decent margin to actively trade in this item as well. Let's see for availability. Well, it's still not that bad. Look at that, 122 of them being brought to the market here. Then we've got several more orders that are going in the 20-30 range. So yeah, availability doesn't seem to be a problem. Demand is quite high as well though. Look at the buy orders here, less than a day old. I mean, someone is just coming in here in the last 10 minutes with trying to buy another 30 or 40 of them. So I think people are also positioning themselves to start creating stocks of these skill injectors, because the demand is obviously extremely high. If in the first month of these items launching we already have a spike back up to 650 from 615 of like another 5-6% back up, when normally a new item just continuously declines until it finds a certain balance in the market. So that's pretty interesting. Moving on to some minerals then. Let's check out some titanium at 705. And titanium, yeah, apparently wanting to stay just above 6.10 ISK on the chart, crossing the 20-day moving average as well for the 5-day moving average. So it looks like the bottom of 610 will not be tested at this point, because we are going back up slightly. 622 for the sellers, 608 for the buyers. They tried, but you can now see that there are quite a few buyers coming in, even in the last few hours here, that are going up from 604, 605, 606, 607, 608. So there is quite a bit of competition on the buyer side as well, which puts a floor close to 610 for them, for titanium. So if people want to pick up more titanium right now, they have to consider 610 or even more, which is of course going to protect the titanium prices from dropping below that. Availability looks alright, but not too major here. Less than a day old. We've got just a few orders of like 150 million units, so people are no longer dumping billions of titanium, which they were obviously doing when it was going for 6.3, 6.4 ISK. So yeah, the correction seems to be over here, and we are in for, I think, more stable titanium just above 6.10 ISK. So let's say trade range of 6 to 620. I think it's definitely in the books, and I think there's a strong possibility that we will not break 610. So even 610, 630 is possible as a trade range for now on. Looks pretty good, I think, for miners. A decent price for titanium and stable demand as well. Let's take a look at pyrite next. I'll start with the chart here. So after the major correction to a 6-month low of 10.8, we did come back to 11.10, and we're trying to stay above that. So let's see what the sellers are doing. 11.17 for the sellers. 10.98, so just below 11 ISK for the buyers. They are trying, but here once again, what I am noticing is that the recent buy orders are competing with one another towards 11 ISK, so the demand is starting to come back. And if you're looking for a sell order less than a day old, you have to actually go a little bit lower here. They're trying to sell at 11.18 ISK, so not even the lowest price. This is an older order that's only going to be here for another 3 days. So again, pyrite also seemingly finding a bottom, a price range. I would say 11 to 11.20 is definitely a possibility, an average of 11.10 where we are now on the chart. So that's the second one that seems to be indicating that same pattern, after a bit of correction finding its price range. And apparently on the supply demand side, I'm not seeing anything really pop out. I mean, there's still a bit more supply here, 200 to 300 million, but the demand is still here, 50 million as well, 100 million here, 77 million here. So if that picks up just a little bit, then pyrite could indeed start to stabilize as well. Next up, Mexalon. Alright, pretty similar actually. After correcting below 60 ISK for a little bit, we went back above 60 ISK, and we're currently basically trading in the 60 to 62 ISK trade range, and it looks like it could be stable there. So let's see if there's demand. Yep, there are definitely orders less than a day old that are coming in here, competing with each other. 5903, 5912, 13, 14, 18, 20, 22. So these are slowly going up, having to accept that people are not willing to sell their Mexalon below 60 ISK. I think that's what it's looking like to me. And on the demand side, not that much new, on the supply side, I'm sorry, not that much new supply. There's 64 million that's trying to sell above older orders. That's pretty interesting, pretty unusual, but I guess that means that people know what kind of price range they are expecting this to be able to get to. And just a very small order here of just 300,000 units, so that's really not very important. So yeah, not that much supply, decent amount of demand, but as soon as we start approaching 62 ISK, I do think that supply is going to start to take over again. And so yeah, it looks like Mexalon is also finding a current trade range and is set for a more stable period at the moment. Next up here we've got Isogen. That one is not doing what I would like it to do. If that one had stayed above 100 ISK, it would have been all high-tech minerals showing the same pattern, but this one is actually breaking 100 ISK and is going lower than that. So the question is, will Isogen have to find a new bottom that's below 100 ISK? It is possible. The sellers are now at 99.47, the buyers at 97.51. Demand, new demand, yeah, pretty decent here actually. In the last 24 hours we are going from 95.44 to 97.51, so a bit of an increase in the demand price there as well. On the supply side, not that much coming in below 100 ISK though, so maybe Isogen is lagging behind like 1 week. If demand keeps up and keeps increasing the price towards 98, 99, then the sellers will have the opportunity to keep selling above 100 ISK, and so as a trade range 95 to 105 I think is possible, but the fact that we broke 100 ISK on the chart here on the sellers as well is of course not a good sign. We could go a bit lower as well if some supply decides to show up here in the Isogen market. So pretty interesting. I think it could still work out for Isogen as well, if there's not too much flooding happening here all of a sudden, if people do decide to not sell Isogen below 100 ISK. But if they do, then yeah, look out below, because that barrier being broken is not good news. Next up, let's take a look at Noxium here. Also trying to find a trade range, unfortunately at a very low price range of around 470 ISK, so we are definitely hovering around that, dipping to 460, going back up to 485, then again to 465, now just above 470. Less volatility for the tops, the bottoms though, that doesn't look too good, but yeah, we are at a 6-month low. So Noxium, I would say, is also showing signs of stabilizing just a little bit, but at an extremely historically low price, which I don't think is that great for people mining Noxium at the moment. You might want to hold on to some of your stocks. The buyers 454, the sellers 468. New supply, that still looks okay. 1.5 million, 5 million, 8 million here. On the demand side you do have 2 million, 3 million, 3 million, but there's still more supply than demand here. There's still supply coming in the last 24 hours, although the price ranges are not always competitive, so it's not like they're actively decreasing the price to try and get rid of their Noxium, but the supply is still there, and so that's not really good news for Noxium if you want to see that one go up in price. Then next up we've got the Nosec ones. Let's start with Zydrine, which went up quite sharply here from 900 to almost 1400, so that's definitely a 50% increase in price. That can't last for too long, so last week was the right time to sell. We're correcting a little bit towards 1300. These sellers are at 1364 already. The buyers 1264, sorry. The buyers 1205. Obviously supply is coming in at these prices. People that did buy below 1000, let's say, are obviously taking some profits on these trades. Demands, yeah, is also dropping a little bit. We've got 1 million being bought here, but other than that, people are trying to buy closer to 1200 at the moment. And oh well, still all of these orders below 1200 are being put there, so people are basically placing themselves to catch that Zydrine as it corrects from this pretty sharp increase in price here. The question is, how low can it go? How much volatility is there in this market, and why is this happening like this? That does seem like something a major nullsec block could actively try to do, which is pretty damn interesting in my book. Next up here we've got Megasite. Similar thing happening here, spiked up to almost 1400 as well, with a bottom of close to 1000, so a little bit less percentage wise, but now also a bit of a correction coming in. Let's see if people are also placing them, yeah, on the buy orders here. 1220, not that much, so you would have thought that maybe people would be placing themselves below 1200 as well a little bit, but that hasn't happened. So it is possible that Megasite is just not going to correct that much, or they don't expect Megasite to correct that much, because historically it has been more expensive than Zydrine. Currently selling for 1315, Zydrine selling for 1264, so that has come back in line with our historical perspective, but I see a lot more buyers positioning themselves on the downtrend for Zydrine than in Megasite. That also might just be an opportunity for you if you want to maybe try to pick up some Megasite on the downtrend here. Of course, personally, I would prefer to buy close to a bottom, but if you absolutely want to have Zydrine stocks or Megasite stocks, then putting up some buy orders on the downside here could be a good idea. So that's it for the mineral markets. Pretty interesting. Some stability in the HiSec markets, and well, instability, possibly, I think, market manipulation by a big group in the nullsec ones. Moving on to some Tech 1 ships, 1730. Let's take a look at that. Starting here as always with the Armageddon. There are still a decent amount of Armageddons, but they are localized in just 5 sell orders of 145, 45, 57 and 87 units. So selling at 217 million. I guess the Armageddon just not that hot at the moment. The volumes are below 50 on average per day, which is definitely not that much, and the price is hovering at around 216 million. So people just aren't selling them to the buy orders at 211 either, and if you absolutely want an Armageddon, you're going to pay 217 million for these at the moment, which to me is pretty surprising considering the low volumes. But it's just not that available. I guess people aren't making them either if they're not used that much. So this is, well, disappointing from my perspective, because I love the Armageddon, but if you have a blueprint and you have the opportunity to make some decently cheaply, then this could be alright to bring a few Armageddons on the market if you can't find anything that's going to yield you a profit. But yeah, it is an expensive battleship, so I guess people are going for more meta and smaller ships at the moment. Next up here we've got the Caracal, staying below 11.8 million. So after a bit of volatility, I think a price range of around let's say 11.5 to 12 million I think is possible, considering the availability here. Definitely not bad, with 195 units coming in the last 24 hours as well. the caracal market, I think, is going to start to stabilize unless a really big alliance decides to all of a sudden buy 300-400 of them. Then this is looking all right for the caracal. Daily average of around 200 units. I think it's manageable if 200 units come in just like that in one sell order every day. So yeah, the caracal showing some signs of stability here in my opinion. Next up here we've got the Dominics, again starting to trade around the 200 million range. We went towards 195 here, which is, I would say, below the average. Then we're going back up. This is a chart that is starting to look quite a bit more like a stable chart, right? We start at just above 200 million, we end just above 200 million, and the average here for the Dominics in the last 6 months has obviously been 200 million ISK. So finding a new price range after quite a bit of volatility before here now, we are starting to show indeed a more stable Tech 1 market. Volumes for the Dominics, yeah, obviously higher than what the Armageddon was. If you look right here, most of the days below 50 for the Dominics. At least there are some days where we're selling 60, 70 of them. And the biggest difference, of course, is the availability. There are Dominics being sold on longer terms at price ranges of 2.5, 2.6, 2.10, 2.12, 2.18, 2.20, something like that. So yeah, the Dominics, while it is not apparently being used in PvP that much at the moment, it's still a really good PvE ship, and that is why I think it is actively being built more and being bought more as well, but also showing decent stability over the last 6 months, which is good. I like a stable Tech 1 market personally. I think it's good for the availability of these ships for newer players, so that they know exactly what to expect when they want to start saving up money for the specific battleship or whatever it is that they want to fly for, like let's say missioning, stuff like that. Next up here we've got the Drake chart, the Drake chart. This again showing that the Drake is currently trading around the 55 million range. A bit more volatility, you know, spiking up, but spiking up to 57 million, that's just 2 million. So I think that here once again the chart is showing more volatility than there actually is because of the scale. This is only volatility between 53 and 57 million. That's less than 10%. That's not that much. Currently the Drake is trading a bit higher, so I'm guessing that either the volumes have gone up a little bit. Yeah, average volumes here during that increase in price were pretty high for a few days, and the fact that there's still a high volume spike here 5 days in has managed to keep the price a little bit higher. But I think that also means that supply is starting to come in. Exactly, here we've got 27, 10 of them, half a front page of new orders, and they're trying to still sell close to 58 million, but demand is staying at 55 million. And so I actually think that with a bit more effort on the supply side, we could start to correct back towards the average of 55 million, which over the last 6 months, again, on average 55 million for a Drake, I think is pretty reasonable. Although most of the time I do think we've been above that. So well, we've been below that for a while as well. So yeah, it's interesting, but on average 55, 56 million, something like that for a Drake. Just not as stable as I would like to see it. Next up here we've got the Mauler. That's quite okay, trading in the 11 to 12 million range for quite a while as well. One major spike here at the end of October, that was volatility across the entire Tech 1 market, which by now has mostly been absorbed, I think. But here at the tail end also increase in price for the Maulers because there were just not that many available. You could see the volumes dropping off here quite sharply as well. Then all of a sudden volumes spiking up quite substantially, and as a result price went up quite sharply here all of a sudden. So let's see if people are bringing Maulers to the market. They're starting to. Here we've got 39.17, another 30 of them selling at 13 million. Whoops, that means we've got 1 hour left, right? Yes, we do. Good. 13 million, yeah, they're trying to sell at the high price here at the moment, but I think that this will here once again start to show more and more supply, because this is a really good price historically for the Maulers, and so the pressure is on. Let's hope that by next week we will actually see more Maulers available, and thus the price start to decline back in the normal trade range of 11 to 12 million. Next up here we've got the Myrmidon. That's quite a bit better as well in my book. A bit similar to the Dominic's chart. I mean, we've got some spikes, but on average the Myrmidon probably trading in the 54 to 55 million range. Although of course it must be said, the first 3 months here clearly above that, the second 3 months clearly below that, and now just working its way back to the average at the moment. So a bit of an overreaction, I guess, to this price spike up to 57, as we dipped close to 51 million, but now people held off long enough, and we've got some supply coming in here, 10, 12 of them in the last 24 hours that we can see. Averages probably just below 50 units a day. So yeah, coming back into a normal price range because of the well, dip well below the averages that happened after the last price spike. But this is, I think, okay for a Tech One chart. Again, keep the scale in mind here. A bottom of around 52, a top of around 60. That is not that big of a margin, with the price basically bouncing in between those two most of the time in the last 6 months. So feels quite okay. Availability not that great, but all right as well, I think. Next up here we've got the Oracle. Ooh, that's completely empty, spiked up to 90 million. So obviously the Oracle production could be what you want to do if you want to make some profit on your production at the moment. But again, if we look at the 6-month chart, starting at above 80 million, we did go up for like a month here, but trading in the 80 to 85 million range most of the time. There is hope for some stability in this market as well, if people can actually produce enough of these oracles to keep it stable, because only 7 on the market is of course quite a low count. Next up here we get the Raven. That is obviously not that stable. Big increase in price from 182 to 202 million at the start of our 6-month chart here, then dipping back to 182, more volatility, and now trying to trade in the 190 to 194 trade range right here. Availability though is starting to be quite a bit better. We do have a decent amount of Ravens on the market at the moment, which will hopefully again start to stabilize this market just a little bit. But yeah, pretty wild ride for the Raven in the last 6 months, especially here. That price spike quite violent as well. Next up here we've got the Stabber. I'm reading that as quite okay. We know that this volatility did happen in October right here. And it took the Tech One market a little bit of time to basically absorb what happened here. And you can see the tops continuously decreasing, except for one exception at the tail end. But we are now trading once again in the 10.5 to 11 million range, which it was 6 months ago. So basically the Stabber market seems to have recovered. What is the availability looking like? Not too great, but most orders seem to be 10, 20, even an order of 99 here. There are a decent amount of Stabbers available on the market, not that much demand for it, and so the Stabber has managed to stabilize back into a normal trade range. Quite okay. Finally here we also have a Tornado. Starts at 74, again spike right at the tail end here. So are people buying up these tier 3 battle cruisers for a gang preparation, something like that? It's been a while since we've had a Bernjita or yeah, Hulkageddon or something like that. So maybe someone is bringing that back and trying to prepare for that. Although, yeah, Tornadoes are being brought to the market here though. Less than a day old, we've got more than a full page of them, trying to sell them close to 78 million at the moment. So price is going down, but of course normal trade range I would say 75 million, around that for most of the last 6 months. So this is obviously a big spike up without the corresponding volume increase. That's something that's pretty weird. But it's looking like people are plugging this Tornado gap and will be back in the normal trade range very soon. Next up, we've got the Typhoon, not that available, trading below 190 though. So this one is trying to find its range as well. Although we started 6 months ago at around 175 million, very cheap for a battleship in my opinion. We went up to 195, back down to 180, some volatility here as well. But now if we're trading in the 185, let's say 190 on average range, I think that's okay for the Typhoon here. Just it's not that available. It looks to me like the battleships are not in vogue at the moment. People are not producing them, not using them, not losing them in Nullsec especially, and so this is a pretty dead market when it comes to the volumes. Look at that, average volumes, maybe 20 Typhoons that are being sold a day, and as a result, yeah, people are just not producing them either, which does make this these markets rife for manipulating them, because you don't need that much ISK to basically buy all of them and then release them, let's say, except for those that are being sold here at 287, something like that is not that difficult to do because they're not being produced enough. Next up here we've got the Vexor, obviously also a stable one, just below 12 million. One big price spike here, but that has already been worked out here. So obviously big volume spike corresponding with the increase in price up to 14 million. So not that bad, honestly. But we are back trading them for 11.5 million, buyers below 11 million, and 148, 57, 26, 39, 47, 46. These are pretty damn big volumes. It is possible that we'll overshoot this a little bit. In fact, the sellers are already competing below 11.5 million, which is below the trade range. So if more keep coming in here, then we could actually see the Vexor go down below its averages a little bit on the chart, probably move back up pretty quickly, but it's interesting to see that on a major price spike there tends to be really big volumes coming in on these ships all of a sudden. So yeah, there you go, Tech 1 market. Some of them are showing more stable prices over the last 6 months or so, but the volumes just aren't there to keep it there. If someone decides to all of a sudden buy a Dominic's fleet, it would be a problem for the market. We can see that we don't have that many oracles left, which if you look at the volumes right here, 7 of them, that's absolutely nothing. So yeah, it's a mixed bag still in the Tech 1 market. Next up, Tech 2, let's see if we can find some trade opportunities, 3140. And let's see if we can spot anything. Here's the Basilisk. So obviously one thing to keep in mind if you have not been following IFTalk is that early January you see this major price spike here for the Basilisk. This basically happened across the Tech 2 market. Now one thing that I think we should keep in mind here, I'll be looking for bottoms for trade opportunities, but I think the tax changes could have a major impact on the Tech 2 trading because of all the different materials and all the steps that are needed to create a Tech 2 ships. The impact of the taxes could be compound when people are actually making these, and that's very dangerous. I think it's difficult to predict what that's actually going to do to the Tech 2 market. It could increase the price quite a lot all of a sudden. So that's going to be very interesting in my book. What we're seeing here for the Basilisk at the moment is of course that major price increase mid-January, early January, then the correction back down to below 190, another price back up to 205, and now we're going back down towards 195. The buyers are trying to buy them below 190, which could be pretty good if you can buy them here, considering, let's say, everything past January. Of course, personally, I would like to be able to buy them below 180, but this is already not so bad. On another price spike, 10-15% should be possible if you can pick them up at, let's say, 189 or something like that. So yeah, the Basilisk on the buy order side could start to be interesting, especially if longer term you think that the tax changes could actually increase the price quite substantially, and yeah, basically more stably, because if you need more ISK to start producing these effectively, then of course prices are just going to start to increase, and new bottoms may need to be found in this. Next up here we get Cerberus. Yeah, that is unfortunately with the bottom of 175. Let's say I would like to pick them up close to 180 here. Obviously doable at several points on this chart. Currently trading in the 205 trade range. That's just too high at the moment. I wouldn't risk anything on the Cerberus market. It is a very popular doctrine in nullsec at the moment, so that is probably why this one is trading so high. But if you still have some that you can sell for a profit, I think it's a time to do so. But if you're looking to buy, this is not the place to look. Next up here we've got the Guardian. After volatility and bottom of close to 130, this one is just going up once again. That's really surprising, going up to 160 million. It could be that this is also part of the war that is happening. I think Pandemic Horde is actually attacking Space Monkey Alliance at the moment, not for a sovereignty war, but just making their life miserable. And as a result, Guardians, which I think are pretty important in smaller fleet when it comes to the endosis mechanic, could be pretty popular at the moment. And as a result, yeah, 160 million, that's definitely not bad if you have bought them at 130, but if you're looking to buy again, that's not a great opportunity. Here is the Hound finally coming back down a little bit after a major spike up to 27 million. What are the buyers trying to pick him up for? 19 million, so they are definitely trying to push the price back down quite substantially, although of course trading below 18, close to 17 million is a possible bottom as well. This again will depend on what you think the taxes will do. I personally think that the taxes could add a bit of a premium on all Tech 2 ships across the board, but I'll need to analyze that a bit further to be sure what to expect there. But Hounds are finally starting to correct substantially. As I would say, it's still too early to try and pick them up here at 19 million, but if you expect more volatility, then of course it could be the right time to do so already. Next up here we've got the Ishtar, which again here January started to increase in price, top at 200 million, correcting back towards 180, but still trading in that range. And personally, I think that that is not too great for buying them if you want to make a profit on a trade here. Next up, we've got the Manticore. That is starting to look quite a bit more interesting, right? We had two bottoms here, close to 21 million, quite a bit of volatility up to 27 and 31 million, and we're now going back down below 23 on the chart. The buyers are at 21 million. So yeah, if Manticores, you know, there are still decent volumes available here, I think you may be able to pick them up close to 21 million. And looking at these sell opportunities here, this could be all right to start to maybe try to pick up a few of them on the cheap. Of course, we did go close to 20 million at the very bottom, but this is already the buyers are already trying to find the bottom again. So this could be all right if you want to look for an investment to make on buy orders. Next up here we've got the Nemesis as well. Pretty sharp increase in price here, went up to 26 million. We are going down. Of course, I would like to buy them close or below 18 million. The buyers are still at 20 million, so I would say that this is still too early for the Nemesis, but we are starting to go down though. Next up here we've got the Oneros, working on its fourth major spike to a new 6-month high in the last 6 months. I mean, this is a great chart, I think, if you're actively trading. Look at buying at 140, 145. You had 3 good opportunities and you could sell for 175, 175, 175, and now 180 million. That's 40 to 45 million in profit. That's like 30%, 25% easy on selling just below the top here. So this is a great sell opportunity once again, but not a great buy opportunity. But this is a perfect chart if you're looking for that volatility, for the opportunity to make some money trading. This is absolutely great in the last 6 months. Next up here we've got the Purifier, finally also going back down from like 20-24 million trade range. Let's see what the buyers are at. Let's say below 18 million would be great. 17.5 million. Yeah, if you want some purifiers for the next batch of volatility, I think that it could be alright to start setting up some buy orders for this one. So the chart has yet to catch up, but the buyers have already moved in this trade range right here. Next up we've got the Scimitar. Again, logistics cruisers seem to be pretty popular at the moment, and so that one is going up to 175 million. If you bottom below 125, I mean, just imagine the amount of money that's being made here. But big volume spike here pushed the price to a 6-month high of 175. So obviously, if you have them, sell them. But if you're looking to buy, this is definitely not the place to look at. And finally here we have the Vengeance that also went up in price, which was pretty surprising to me. I mean, if you could have bought them for 19 million and sold them for 23, that's definitely not a bad trade. We are starting to go down and the buyers are still at 21. So this is in between, you know, you could still make some profits if you bought at the bottom, but it's probably too late for that. And it's way too early to say that you could buy Vengeances at the moment. So yeah, I don't like the assault frigates. They don't show enough real volatility, like short-term volatility, I think to be good to trade. But honestly, this right here at the early part of the chart is quite alright, but it is a major volume spike that actually did it. Could also be an announcement, I think. Was it the rumor that CCP might nerf the destroyers that have basically taken the place of these assault frigates or something like that? I think this is an outlier spike personally, and so I don't like the assault frigates myself. Alright, next up we've got the Tech 3 market, 4005. So this is gonna be another nice and lengthy EVE talk. Let's start with the destroyers here once again. We're starting to see more stability, the Tech 3 market, more availability. I think last week almost all of them showed decent availability. So let's see, the Confessor stabilizing below 60 million. Availability definitely not bad. Last 24 hours, half of the front page, 50, 16, 40. Definitely pretty damn good. Confessor looks like it could stay in this range for now. Next up we've got the Hecate, 55 million. Again, you can clearly see the stability that is starting to show up. You can see the availability that is starting to show up here as well. And less than a day old. Just one of 25, but almost a full front page here. So another 19 here, again 50 or so. Hecate is coming in the last 24 hours. This is again looking pretty good to keep trading in this range. Next up we've got the Jackdaw going down towards 54 million. So again, if availability is alright, which it's decent, not as available as the other ones, but we still have 50 here, 16 here waiting to be bought out. And it's just they're not being brought in the same volumes here. So we only have 4 new Jackdaws that have been brought into the market. But despite that, there are still Jackdaws available, so we could keep trading. Let's say 55 to 60 million range is not outside of the realm of possibilities. And if of course the Jackdaw starts increasing in price, availability is going to move a little bit towards it. And so I think that it's looking alright. Next up we have the Zwepel, also again going down in a more stable manner, dropping towards 55 million, and despite that still 56, 15, 18, 10 Zwepels being brought to the market. So only the Jackdaw is a little bit at in a more danger zone, but not by that much for availability. It is also, of course, the cheapest tactical destroyer at the moment. All the other ones are still being produced and brought to the market in good volumes. And so, yeah, it looks like this has definitely stabilized quite a bit for the destroyer market. No signs that this is going to spike up like this and this here again in the short term at least. Let's take a look at the cruisers then. Here is the Legion chart going up from 170 towards 190. And how is the availability? A bit less, 34, 20, 10, alright, but these are not too recent, only 2 of them being brought to the market. So it looks like the production focus may just be on the destroyers at the moment. And the Legion, well, it could be manipulated into a spike up to like 225 million on the chart if you're willing to buy just 50 of them at around 200 at the top. Then you know this could be gone in one big purchase. So if you had more orders that would like transition from 190, 191, 192, 3, 4, 5, etc., especially here, then you'd have a higher chance of stability. But the Legion is at a threat of really going back up substantially all of a sudden, unless people would start bringing those to the market as well. Let's take a look at the Loki chart next. Very similar, going up towards 190. Availability, that's a bit better though, right? Full front page of new Lokis, and here we have still 65, 10, 16 of them. That's quite a bit better in the availability, especially the relisting here apparently at 187.5 of quite a few of them should slow down the increase in price here for the Loki. But very similar chart here once again. Let's take a look at the Proteus. 200 million stabilizing just below that. What's the availability looking like? That's better. So 200 million, let's keep that price range in mind for the cruisers here. And then you have 2011, half a front page of new Protea orders coming in here, and the sell order is looking quite a bit more stocked here as well. So that's pretty decent for the Proteus, some more stability just below 200 million. And then finally we've got the Tengu. That one is going down towards 180. That's quite surprising. And despite that, we still have some relisting happening here as well. Full front page of new Tengus coming in. And what is this looking like? Well, as you can see, quite a few Tengus still at different trade ranges available as well. So the Tengu should not spike up anytime soon. This is pretty interesting in my book, that the Legion and the Loki are not that available. They are going up in price towards 190. So let's say that they want to trade most of the cruisers just below 200 million, then that would be normal. But then the Tengu is doing something completely crazy, actually going towards 180 with big volumes being brought to the market. So it's difficult for me to tell. I was starting to see a pattern of, okay, they'll trade in, let's say, the 195 trade range, and above that there are a lot of Protea being brought to the market. So this is just going to start to stop here, and so next up they can start producing more Legions, more Lokis as they start to trade in the 195 range. But then it's just a Tengu. Why are people dumping those at 180? That's a little bit strange, but I think overall availability is up for the Tech 3 market, and stability is starting to rear its head once again. Pretty interesting stuff. And then finally for the extra material, 46 minutes, someone requested the fuel blocks, so I'll obviously take a look at that. The good news is, of course, that we will stick to these new fuel blocks. We will add an extra component to produce them at the Citadel expansion, but as a result we're not going to need to switch to a 5th fuel block for the Citadel specifically, and that should keep everything stable here, in my opinion. So 6 months ago we were at 16k for Amarr fuel blocks, now we're up to 18k, but we are pretty stable in that trade range for the Amarr fuel blocks for now. So it looks like Amarr POS usage, fuel usage has gone up in price towards the winter, and then has stabilized here after the winter period. Let's see what Caldari has been doing. Very similar situation, going from 17.5k up to, let's say, 19k for a bit, then spike up here, correction back down here, a bit of volatility in the Caldari fuel block. I'm actually reading this as the announcement of the new fuel blocks could possibly have something to do with the spikes here. Now we know that it's not going to happen, so it dropped back a little bit, but all of this is actually quite okay for more POS activity, even in the Caldari POS activity as well. So not that bad in my opinion. 20k for Caldari fuel blocks at the moment. Gallente fuel blocks then starting at 16k, ending at 18k. So again, over 6 months, clearly an increase in price. I guess Gallente POSes aren't used that often, and as a result the increase in price is not that big. Again, some volatility here, mid-January, early February, could be due to some speculation around the Citadel fuel blocks, but that has gone down apparently, and yeah, 18,000 ISK for the Gallente fuel blocks. up over 6 months, which could be an indication of either preparation as well, of course, for citadels, or increased POS activity, and since the winter, stable POS activity. Finally, Minmatar ones. Very similar story, starting at 16k 6 months ago, now trading at 18,500 ISK. Some volatility at the tail end here, which again I could attribute to some speculation around citadels, but the general story here in the fuel blocks is that apparently in the last 6 months we did go up a few million, and I'm actually seeing this as increased POS activities towards the winter here. They're all showing a similar pattern. Galente fuel blocks a bit earlier, Caldari fuel blocks very similar, and then Amar fuel blocks once again towards December. And here is the Minmatar fuel blocks. So increased POS activity towards the winter, and actually a maintaining of that POS activity since the winter. I guess everyone is actually sticking around to wait for when citadels will actually drop. So if this is indeed the case, that's probably pretty damn good news for the EVE Online community in general. Anyways, thank you very much for that suggestion. If you're still around here and you have other suggestions for the extra material, feel free to post those in the comments. And for now, thank you very much for watching, and I'll see you all next time.